Classic. Hopefully it works now. Yeah. Anyway, I'm sitting down because hopefully, can you guys hear me? Classic. Yeah, good. All right. So, as you know, I have a very, very strong concern that 3 years from now, maybe less, maybe 5 years, but I do anticipate AI will have a huge impact on the markets, not only stocks, cryptos, futures, etc. Given the sophistication of AI, algorithms, bots, I feel we have this limited window of opportunity to share things that are very, very important. And my goal is for the community to thrive as best as possible. And my background is pair trading. So here we are introducing what I know is the world's best tool for optimizing pair trading, because I've been thinking about this for 33 years and we built it over the last 2 years. So let's jump in and make sure everything is good. I'm going to go through this pretty quick. There's going to be an intro set of slides, and then I'm going to jump to some charts and show you how this whole thing works and how it can be beneficial to people out there. So first of all, there's a lot of questions regarding PTOS. PTOS is what I call pair trading on steroids, how to use it, what to use it for, and on and on and on. So I'm going to cover as much of that. I'm also going to disclose a cool trick as well that I use for it and how I use it. In addition, couple of little parts to this. First of all, what it is, pair trading on steroids is a tactic around trading pairs that are inversely correlated assets. As one asset declines, the other one ascends, allowing for gains both upward and downward market movements. And this approach empowers the user to capitalize on an asset that's rising and then shorting when market conditions change. And we've seen a lot of that too. A lot of intricate little directional shifts in the market all the time. Nothing goes straight up. Nothing goes straight down. Everything is zigzag, and that's what this is for. In addition, we have a very detailed kind of crowdsourced document that looks at all of the inversely correlated pairs. And this is very important. You can't pair trade with this model things like Tesla versus Bitcoin or whatever. You can, however, trade things that are inversely correlated. For example, Sol 3x leverage long versus Sol 3x leverage short, or Tesla versus Teslac, or BITO versus BT, etc. There are over 600 pairs where you can actually do this, and it's a lot of fun. And I'll show you exactly how it's done too. And part 3 is why do we do it? It's very low risk. Obviously, correlated pairs is a very low risk strategy, since the two stocks in the pair are expected to move in opposite direction. The trader is only exposed to risk if both stocks move in the same direction, therefore they can't. And second, it's a highly profitable strategy if you know how to do it right. And the trader can identify a pair, again, that are inversely correlated and play the odds. It also helps you diversify. It also helps you make money in up, down, sideways markets, etc. as you go forward. Now, in this as well, I'm going to show you what we call the optimized trend. There's a big difference between, we have a model called the trend model, which has a backtest, and the optimized trend model. And the trend tells you when the trend is moving up or down. And the trend model was tested over 40,000 times to find the optimal. But the optimized trend is a bespoke trend calculated on a per asset based on a number of calculated factors. So it is unique to every single asset. And this helps identify when you need to stay in the trade or stay out of the trade. And we'll walk through that as well. And remember as well, the other thing that I always stress is find your rhythm. Critical here. Find what you like to play, get good at it, find your time series that you like, backtest everything, paper trade everything, and you're good to go. So before I jump in, let's just look at some charts, and then we'll come back and show you all the different applications for this as well as we jump ahead. So I'm going to try and share my screen. Hold on one second. Pop this up, blow this up, and turn on the very first one. And we're just going to jump straight into an actual chart here. And let me share my screen. There we are. So hopefully this is all blown up and big, and we're going to walk through it real simple. And again, just doing this on the fly. So what you're looking at here is basically the model. Let's turn on, turn off a few things first. I'm starting with the 4-hour, but you can go to the daily, etc. So let's play with a few things. We can minimize this. This is the model. Actually, let's start with the model. This is where you put in your comparison asset. So at the top, we've got Bitcoin Strategy ETF, which is a Bitcoin futures product. They just launched the Ethereum futures product. They haven't launched the short Ethereum futures product that is coming very soon, I imagine, just like it did after the Bitcoin futures product. But here, you put in your comparison asset. In this case, it's BITI. I create a whole watch list of all my pair trading on steroids assets so I can see them and know exactly which ones I want to play, pull up, and adjust. Then on the top, this is your pair trading on steroids model. We'll minimize that for now. And then on the top, you have the PTOS signals. This gives you buy and sell signals. Now, your look back period should be the same for both. Down below, I have 60, and this is 60, but you can use 30, 45, whatever you want. It has a back test, so it'll tell you exactly what's on and what's off. You can turn the back test off if it bothers you, but you should always have it on. And you can do your start date, end date, etc. And then what I like to do is enter with, 33% of my current holding for this asset, and I exit 33% LIFO, last in, first out. So if I'm doing 2 trades, I'd have 66% in. In fact, sometimes I just put $100. Imagine I'm doing a $100 trade. I will add the second time, if there's a second buy, I'll do double that. So it'll be a $200 trade. So 100% of my allocation towards that asset will be in. So that is the piece. Now, this is where it gets interesting. So what we're doing, first of all, let's kind of zoom in on this a bit. This is Bitcoin and the futures ETF. I can get this out of the way. And if we zoom in here, we'll go back to, well, this is March of this year. There's 2 things I want to show you. One, this is the model at the bottom, okay, the PTOS model, and it shows you the standard deviations from the mean. Very important. When it goes below -2 or 2.25 or 2.5, whatever you tune in, that is typically a buy signal. And that's confirmed by a buy flag at the top. And it's also confirmed by a change in the trend. So it goes from orange to blue. And when it's blue, you go long. And then when the trend shifts again, then you move back. So here, for example, when we look at the BITO versus BT, what we're doing is we're going to go long here at the green flag, which means we buy. And then these are sell signals up here, but they're not confirmed at the bottom when we dial in the model. So for example, here, you'll see if I go to my style, I have my lower bound at -2.2. My upper bound is +2.2. That should be the same. That should be +2.2. And this helps me deal with kind of the noise and find actual proper signals where we want to get out. So here, although we didn't breach the level, we get sell signals, but we stay in the trade up until this level here above 2.2 standard deviations. And then we also get the red flag. That's when we go short. So we sell our long position, we sell BITO, and we buy BT. So we get the money going up, and then we go short going down. And here we stay in this trade, go down, 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 follow the trend, wait for the actual buy signal, which ends up being a short cover signal, to go long again, and down, down, down. And note as well, here is a green, but it's not confirmed down here. Therefore, we hold all the way, and we get to this level here. This is when we turn, wait for the buy flag, and then we cover the short, okay? And then watch the trend. Trend is still turning down. Then we go long again here at this other green one, and then up to the next one. So that is one simple example of how this works. The back test here, you can see that it wins 81.82% of the time. If we change the time frame, we go to the daily, for example, you can see here it's 100% win rate. The longer time frame you have, the higher your probability of success. But that would mean you do less trades, but you get in, for example, November, and you get out here in Feb, and then get back in August. If we go to something like the 2-hour, we'll see the results. You see the results, the win percentage falls to 72%, so it's not as good. If we go to the 1 hour, it should be even less, 66% win ratio. And for those who are scalpers and high frequency traders, you can go to the 5-minute. That's 80%. You can make this work in the 5-minute. And what you can do is, again, you can dial in your thresholds here and standard deviation at the bottom, high and low, for exactly how active you want to be. But if you have it compressed, you'll see you're not getting many sell signals up here. So that is the first one I want to show you. And I hope things are clear. I hope I'm getting better at doing this. This is Ethereum. The second one, Ethereum, sadly, we have the 21 shares ETH future ETF. There's no inverse negative one yet. We can short against it. There is in Germany. So if you are trading in Germany, you can do the long 21 shares and the short 21 shares in Germany. But I don't trade the German ones, nor do my exchanges have access to them. Now, another fun one on the crypto side before we look at some stocks. Actually, let's look at a stock first. Let's go to NVIDIA. And here, same as before, we pull in our asset. We go to the settings. We go to the NVDS. That's the inverse asset to NVDA. NVDS is the short NVIDIA fund. And same thing, all the settings are the same. The backtest is on. The look back period is 60. That can be 45 or whatever else. Then we go to the PTOS model, make sure it is 60 look back period as well. And we also have NVDS. Very important. Some people forget that step, but that's critical. And here, this has been this one's been on kind of a rampage. But if you imagine, we get in July. I think I sold part in July, and when you can actually come back in, so you can exit the trade here or get out of your long position. Again, the trend. This is kind of a pretty incredible trend from January all the way up to 23rd of August almost. But we did get a sell signal here. And if you stayed in the trade, actually, this is the beauty of this optimized trend. It didn't even turn gold. So technically you wouldn't have sold till here, but you would have stayed in all the way. Now, getting back to this, what you can do is for your signals to confirm them and eliminate the noise, you also dial in your standard deviation. So what I do here, I turn it to 2.4 and minus 2.4, again, to make sure I get rid of the noise. And it helps, again, keep you in the trade. So let's look at what happened recently. NVIDIA has been on a rampage from $400, shooting all the way up to 475. I think it hit 476 today. And you can see here, because the trend is still positive, you're still in the trade. You're not exiting. Also down at the bottom, you're not actually going short yet. You're not exiting your long because you haven't hit the sell signal because it hasn't hit that threshold. So last time you would have entered long is down here. You would have exited short here. You would have entered long here if it hit the threshold, but maybe it didn't. So this is where you have to kind of dial it in and look back and find out exactly how things work. But even so, on the 4-hour, you can still have a very high success rate. Here you see the actual backtest is 100% win ratio, which is insane. Let's jump into NVIDIA on the 2 hours, have a quick look at what this looks like here. 77%. Again, the more frequent you trade, the more you need to dial in your standard deviations to eliminate the noise from the signal. Very important as well. So that's NVIDIA. Let's look at the 1 hour for giggles. It'll probably be the same. 78% of 1 hour is actually more successful than the 2 hour. And for those high frequency traders, go down to 5 minutes. 84%. Wow. So for those who are scalping, if they want to go long and short really quick every, a few times a day, these are actually daily charts here. So you go long here, go short here, hold. You might probably, when you do trade like this, you want to get in and out same day. So go long and get out, or go long, go short, and then get it covered down here. Be very careful though on the scalping. I like, my personal preference is to use 4-hour charts because it really helps back up the probability of winning going forward, like there for NVIDIA. Now let's go, before we go back, actually let's go back to the deck. I want to cover a few more things real quick. Make sure you're all still there. So we pop this up and here, yes. So I mentioned finding a rhythm. I want to show some use cases for this as well. And this is not for people who are new to trading, but it's for people who are kind of more advanced. But it also works for people who can trade in a tax-free account. I want to amplify their gains. So let me blow this up a little bit so you can see this is from Robert M. They say they use the QQQ and PSQ. QQQ is the NASDAQ 100. PSQ is the short NASDAQ 100. And they use the tool in his 401k to go long and short. And that is a powerful strategy. In addition, it can be used to hedge a position so you don't have to get out. So for example, if you're long Bitcoin, but you feel there could be a 1 month dip, you can use this tool to hedge your position and without actually selling your existing underlying position and exposing yourself to gains. In addition, you can play both ways. That's what I like to do. But sometimes with equities, I do it with options. So for example, I use this to sell calls at tops. I don't buy puts. I find it cheaper to sell calls. This, as I showed with Bitcoin, you can do BITO to buy the long asset. And then when it flips short, you go short on the actual position. In addition, you can play multiples. For example, NVDA, we showed there, like a certain price, certain strikes. If you buy NVDS, it's a 1.25x short. And remember, make sure your things are in line. So if you have 300 NVIDIA shares, you need to do about 3,000 or less, 2,500 or 2,200 NVDS, depending on exactly what your calculation is. And it can be used for ETFs and funds. Actually, I'm going to show you an ETF in a minute as well and how it works really well on any time frame. It's insane. Also, futures contracts, so those futures traders, for those put and call option traders as well, instead of buying the stock, you can actually buy a call, and at the top, you can sell that call and you can buy a put or whatever you want to do. You can even go short by selling an out of the money call, as well as sell the call you have. Then Straddle, Strangle options. There's a bunch of options here too. You can buy both a call and a put option at the same price and date. And this approach gains from big changes, either up or down. I do a lot of this, as you know. And if you predict one asset to go up and the other to drop, the strategy can capture both shifts too. In addition, vertical spreads, this is trading options on the same asset but different prices, and allows you to profit from predicted price changes. And this can be done using bull put spreads for rising prices or bear call spreads for falling prices in assets that move opposite to each other. And I'm going to go through a couple more charts, but just remember, it is a low risk strategy. This helps you make decisions. It backs it up with data and historical data. It can also be used extensively by people who don't like to trade options, but they want to play inverse correlated assets, like buying a stock and selling that stock and then buying a short version of that stock. But remember as well, TA, it analyzes history. It's not always right, but we tune our models to make sure that it is right 80% of the time. So let's go back and look at some more charts here. And I want to show you a fun one too. Let me share my screen. Let me see. Yeah, I'm back in. Good. That worked. Let's look at this one for the crypto players out there. This is Solana. Now let's go to, again, we'll start with the 4 hour, or you can start with the daily and see how it performs. So you go to the daily and you can see it's been very volatile. Win percentage only 66%. Therefore, I'd walk away. I dial in my times. Go to the 4 hour. Not good. 4 hour loses. This is why you have the backtest. You don't want to trade Solana 3x levered long and short on the 4 hour. So we go to the 2 hour. And all of a sudden on the 2 hour, it's successful. And that is kind of key. Again, just as a reminder for your signals, make sure you have your inputs here, 60. This is Gate.io, Sol USD 3 short is the inverse. And down here, we have the exact same thing, 60 and the short, Sol 3x. Very important. So here, just to go over it one more time, imagine we're back to, well, this is the 2 hour. So we get more trades. So imagine we're here. We would go long on the 10th or 11th of September. Wait for the trend to turn. Let me zoom in here as well so you guys can see that carefully. So this is the signal. This is confirmed here first, all right, with the standard deviation. And then ding, ding, ding. The reason we bundle it with the optimized trend is to make sure that you're not faked out by signals. You wait for this to change. This is where you go long. You go all the way up here, ding, ding, ding. wait for the trend to change, and this is where you go short, confirmed here, and then you wait. It did take a little spike up afterwards, but then everything mean reverts. Remember that in trading, everything mean reverts. Don't sweat this. You ride it all the way down, so you sell the long version 3x, you buy the short version here when the trend changes right there. That's actually a very important point. See the way the color stayed blue until this point? That's when you go. That's when you sell your long, you buy your short, and then you ride it all the way down to here. Trend changes very fast, and it goes all the way up. And interestingly enough, you probably would have exited too early. But again, look at the blue trend. The optimized trend stays blue, and that keeps you in the trade, and that makes you ignore the signal to get out. And you wait for this top signal here. Trend turns here, so you sell exactly at 1.425 on this asset. Remember, this is the Sol 3x long on Tether and Gate.io, so it doesn't reflect the price. It reflects the price of Solana, but not in the same ratio. And let's look at one more as well. Have we looked at Tesla yet? I can't even remember to do Tesla. Let's look at Tesla. So here, the 4 hour, let's just jump to the daily first and watch the back test. Daily, 100%. So again, the more time you have, the more precision you have. And here, this is the buy signal confirmed at the bottom with the standard deviations, and it keeps you in the trade. And another buy again, you can either double down and buy in some more, and then the sell is confirmed up here. You stay in until the trend turns exactly at that point right there. That's on the daily. If you have that patience to trade between March and July, so that's 60 days, 90 days. If we go to the 4 hour on Tesla, more action here, go recently. Again, you see here, boom, 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 4 buy signals, but you wait for this to be confirmed down the bottom, and there it is at the very end. It didn't reach for the initial ones, and here it does. You got to get those standard deviations in. Then you enter when the trend changes right here, and then you exit when the trend changes. Here, signal is confirmed. Here, signal is confirmed, but you wait for this moment here at 271, 272 to get out, and then that's it. If we go in a more frequent time spot, say the 2 hour, the win ratio falls to 64%, so I walk away. Let's look at the 1 hour. 89%. This is more interesting. Again, for those frequency traders, here you get your hit, trend changes, you enter, and you'd exit pretty quickly out here. Actually, you'd be out. Then you wait to get in again here, confirmed here at the bottom on the standard deviation, and then you wait to get up and you get out again. Sometimes the trend can keep you in the trade longer than you want to be, which is great. I can't actually see if it kept us in here. No, it didn't actually turn. So if we did buy here and held, we could have stayed potentially in the trade as well. And that's very important. And let's look at the 5 minute for giggles. 91%. So here, for those frequency traders, buy long, get out. Buy long, get out. Buy long, get out. So buy long, get out. So here you could do this literally every day. And you'll notice as well what Tesla does. And I've watched this. It's weak in the morning and gets stronger in the afternoon. So you go long in the morning, get out in the afternoon. Get long in the morning, get out in the afternoon. All confirmed here. And if you want to wait for those pico moments, you dial in your standard deviations. So you don't take every trade, but you keep moving those standard deviations to increase your odds of winning. Finally, one last thing we'll look at is, actually, I'm going to show you one thing too. This is the community pair trading on steroids, global inverse correlated pairs. There's over 600 pairs in here tested, all the ones that I've tested and that I commonly use. We got pairs with all sorts of buys and orders and win ratios and ROIs. You got Gregism stuff as well. You got JDog stuff. You got 96 other pairs to play with. And it's fun too. And the product itself is called Pair Trading on Steroids. It's on our website. And also we have a very large community of support too for this product on Discourse too. So let me get back to, where was I? This final trade. This one is interesting. This is ProShares Ultra Healthcare ARC from Arca. It's called the RXL. And what's interesting about this one is no matter where you trade it, you'll make 100%. So if I go to, let's try the daily first, 100% win ratio. If we go to the 4 hour, or if we try the 6 hour, I've never tried the 6 hour on this one. 100%. You go to the 4 hour, 100%. Like literally in, out, in, out, in, out, like clockwork all the time. But you can see it's scattered over a number of months. So here you'd be in on, that'd be the 22nd of June, and you get out 23rd of July, 25th of July. But the difference in price between $82 going up to 92. So you make $10. If that's optionable, that's good. Let's look at the 2 hour. Again, 100%. So here you buy in at 31st of May and you get out 26th of July. You buy in again and you just wait a couple of weeks and then get out again. Let's look at some high frequency stuff on the 1 hour. Same thing. You could buy on 23rd of May, get out 23rd of July, exactly a month. And there's the 3, bang, bang, bang. But you wait for the trend to change to enter. And that doesn't happen until $82. So this thing is like a perfect little range rider with all the signals you need to be able to get where you want to be. So with that, everybody, let me jump back so you can see me. So I'm back. So that is pair trading on steroids. It's tricky stuff. It's very versatile. Can be used for anything. Forex, ETFs, futures, equities, crypto, and there's over 600 different assets you can pair trade. It gives you the signals. You can dial in the settings, the time frames, the standard deviations, and always check your back test. And that's it, everybody. I hope you enjoyed it. These things, let me know as well if they are too complex or if we need to break it down in more detail. But again, as I mentioned before, I do believe we have, with AI coming, we have time to play with these tools, but I don't know how long this time is going to need as well. So let me see. Say, hang on a second. I do have a question. Might as well take this question too. Cubic Crypto is saying long and short, but this is spot trading, not derivatives, right? It's inversely correlated assets. So from Cubic Crypto, it could be spot trading. You are spot trading, say, Tesla, or it depends. You've got to have that inverse asset. So Tesla has TSLA. BITO, which is a Bitcoin future, has BT. But again, you don't want to hold BITO or BT for more than, say, 6 or 8 weeks. So you can use it for spot trading, for futures trading, derivatives trading, ETF trading, anything all across the board as well. And we have another question. I might as well do some questions because this is probably the trickiest video I've ever done. And it's a professional grade tool, but it empowers an individual without, FX trading background, for example, or derivatives, to really change their game. This is from RustyBot. Does this have to be in the same exchange? Do I use the same money, just like swapping in crypto exchange from Crypto Dave? It's better to be on the same exchange so you can actually move real fast. So if, for example, Gate.io is what you can 3x Sol on. So you can do both long and short on the same exchange. And typically, the exchange will have both housed. If they have the long, they'll have the short, 3x long, 3x short. But with things like Tesla, you can do that on any pretty much exchange as well. Another question, I'm curious about that also. I can't swap a stock for another stock on Fidelity, I don't think, which means I take a tax hit to exit. Anytime you trade, you take a tax hit, okay? This is good to do in a retirement account, as we mentioned before. Who was it? I think it was, I can't remember, was it Dave? Hang on, I do have that here. Robert M. He's using QQQ and PSQ. Actually, let's jump in and do that right now. Let's have a look at the QQQ and PSQ. I didn't expect this to turn into Q&A, but here we are. So let's do it from scratch. We'll go to my PTOS list. Start with QQQ, walk through it again, because again, you got to repeat this all the time. Here, we need to go PSQ. We got to go to all, and then we go PSQ. Pull this up. I hope I'm sharing. Oh, I'm not sharing. Hang on a second. There. So I put in my QQQ on my chart. I'm looking at ProShares short here, time frame 60, same settings as before. And the PTOS model, you got to do the same thing. Turn this into QQQ, or PSQ, the inverse of QQQ, and same look back period. All right, now let's go to the daily first. See what we got. 100% win ratio, but the trades aren't that frequent. But here you can see in. So you would have bought if for example you use this, you'd have entered here, confirmed down the bottom, exited here. So that would have taken you from 250 up to 310, 320. Let's look at the 4 hour and we can zoom in, get a lot more activity. And here, let's just look at the last couple of months, because you can see here the QQQ has been a very nice range, ranging from 355 up to say 370, 380. And this is the key, everybody. You could spend all your life kind of being long assets, but it's so much more fun when you can trade them up and down. So if imagine you bought QQQ back in beginning of June at 350, you rode it all the way up, you rode it all the way down, you rode it all the way up, all the way down, and you're still back at 350. So you made nothing. But if you trade it, you can amplify your gains incredibly. So let's look at this. Here, if we look at the PICO moments, now my standard deviations are kind of tight. I think they're at 2.2 still. But this would have been a buy signal confirmed right down here. You would have bought. And the optimized trend kept you in the trend all the way up here to the top till it turns. This signal confirms to get out. That means sell the long, sell QQQ, and you buy PSQ when the trend turns. You buy it here. You ride it all the way down. When you get this confirmation here and it's confirmed down the bottom, you sell the short and you go long again. Then you ride it up and here it's confirmed again. This is where you do the same thing over and over again. So every 4 to 6 weeks, you can make this trade on the 4 hour, and it has 93% win rate. Okay, what type of trading can you do that wins 93% of the time? If you want to up that, you modify your standard deviations, make it even tighter so you get less signal by tweaking these upper bounds, lower bounds. Here I have it at 2.1 for QQQ. But remember as well, you got to store all those settings in a sheet like this, and that's going to be critical as you go forward. So let's look at some more timeframes on the QQQ PSQ. Let's jump to the 1 hour, see what it looks like. 96%. The 1 hour is even better than the 4 hour, which is bizarre. That's really cool. So here you could be in and out within 2 or 3 days, like clockwork. So I hope that helps. But that's another example of, you know, you can experiment and you can discover things, but this master spreadsheet here is gold. A lot of people have done a lot of the heavy lifting, back testing, finding pairs that really work really well, and all the settings associated, the time frames, the look back periods. You see the win rates, the exchanges that are on, like the stuff on Bybit, etc. So all of that is pure gold as well. Now let me see if there are more questions. I'll put on my camera so you can see me, so you know I'm still here. It's not a robot. Can you do this with RSI? Yes, you can. You can do it with anything if you're an RSI trader. But the problem is, I don't know if there's inverse. Let's have a look. Let's have a look live. I'm going to turn this on again. This is good. I get to experiment and learn myself. So let's pull in RSI. Not Roger Sugars. RSI, short volume, long volume. I don't know. I don't no, you can't. So that answers that. And let me see. Bill Novak, explain what the bottom chart is plotting. The standard deviation of what? This is exactly the magic of the thing. The bottom chart here plots out the inverse relationship between the two assets, and they have to be inversely correlated. Best example that people can kind of relate to most is Tesla and Teslac. Tesla goes up, Tesla goes down, and vice versa. But sometimes there is an arb opportunity, And this looks at exactly the history, identifies the perfect points in time to switch gears as we go forward. By the way, we also, this is an interesting one too. Let me minimize this for 1 second. I want to show you, let's look at the 4 hour. We do have somebody who actually bought the product, and all he does, he doesn't even use PTOS. He just trades based on the optimized trend. So here he buys, sells, buys, sells, buys, sells. That's all he does. That's how good this optimized trend is. It'll get you there even without all the signals. If you just want to go long and short, that is the way to play it too. So it is just complete money. We can play with it. Let's go to my position. Let's look at Bitcoin for this as well. Buy, sell, buy, sell, buy, sell, buy here, sell here. You know, like clockwork. Anything works in that. Meta. Meta's been a beast, actually. Let's look at Meta. So let's look at Meta just on the daily time frame, so you can get more of a feel for this thing. This is how the optimized trend will keep you in the trade. You buy here, you don't get shaken out until this point in time here, 16th of August. And then it turns here, and then you buy back in again, and then you ride it back up. So there are people that just trade this. They don't even use the PTOS. They just use the optimized trend as well as they go forward. Thank you for all the questions, actually. This is fun. I should do more of this. Let me see. So Bill, I hope that answered your question. Vicious Lee, when doing vertical spreads, how would you gauge the in the money or at the money using the model? That's where it gets tricky. So for example, it all depends on the actual premium you get for the asset. Now, MicroStrategy, as you know, I trade the heck out of that thing. Let's look at MicroStrategy. There is no inverse from MicroStrategy, but you can see here the signals are pretty clear. Get the hell out. And this is a function of Bitcoin price, but still it works buy, sell, buy, sell, buy, sell. Now, if I'm selling here, and you know I did an awful lot of call selling on MicroStrategy, I sold the first chunk. I think, I can't remember what it was, but I typically sold at the money because I knew it was going to mean revert and head down. Therefore, I was okay selling at the money. If I am afraid there could be a little bit more upside, I would sell more out of the money as we go forward. And the same thing on the inverse on the other side of the trade too. So, Viciously, hope that helps. But again, you got to watch the premium and the time frame. And also, what was the example we had? Tesla, I think, or NVIDIA. The cadence, when you look at the time frame for your down periods, you have to be very careful around choosing the time frame that you sell your option at. You get most bang for the buck with less than 90 days to expiration. And that's when you want to sell those guys, like 60 to 90 days. It's all time value, and it all just dwindles away over time. Let me see. T-Class, please break it down in more detail. Not sure when exactly to buy, sell after multiple consecutive red, green indicators. So this is why, let me pop this up again. Great question. I have to stress a lot of reliance. So here they go to Tesla again one more time. We'll pop this up. So you have a number of things that help you determine the point at which you buy versus sell. Okay, the first I'm gonna annotate this a bit as well. Well, this is kind of messy, but here we have some green arrows. The first piece, I'm gonna pop in a little image here. Let me get this right. So this is your first signal to buy, and another one down here. So this is where you get the confirmation. This is the model that looks at the inverse pair. Now, because the standard deviations are very high, we want to dial it. Well, we're on the daily time frame. Let's go to the 4 hour again. Always start with the 4 hour and then go up and down from there to improve your odds of winning as you go forward. I'm going to go full screen on this guy. So here at the 4 hour is 77%. Let's try 6 hour, 100%. Okay, let's stick with the 6 hour for Tesla. All right. Now, when do we get confirmation? First of all, you wait for the PTOS model to get under that standard deviation. That's right here with this first red arrow, or here, this other red arrow. Then you wait for the confirmation above, the green triangle, that's the buy signal there, to go long. Red is to go short. Then you wait for the trend to turn. So here in this example, it can be staggered between your buy and your sell. So here you enter, you're ready to buy, you wait for the signal, you get 4 of them, but until the trend turns, which is actually at this moment here at about 107, that's when you go in. Then you ride it all the way up, and it says to get out here and here, but notice the blue optimized trend keeps you in the trade up until this point. So you're holding till 208. Then you go short, and then you ride it all the way down. And here you get a confirmation to buy again on, this is the price here is 169. You ride it up, and then you go 204. So you go 169 to 204, and you got the confirmation here. And I have tight standard deviations on this one. Then you go ride it all the way down. A big one here. That is your killer buy signal, especially the more standard deviations you get away. This is a 3.5. So when you get a 3.5 standard deviation to the downside, that's a very strong buy signal. Again, you can nearly trade based on the PTOS model alone, just this bottom part. And then your sell flags are kind of another proof point. It's like you need 1, 2, 3. First, the PTOS model in the zone, green zone buy, red zone sell. Then you buy flag, then your trend turn. Boom. And then you stay in the trade until the trend turns. Here you ride it all the way up until 261, and then you get out. That's it. And then you'd be out of the trade. You would have missed this little ride up here because there's no buy signal, and that's okay. You don't want to catch every trade, but you do want the odds to be very high in your favor. Then you wait all the way down. Next time you enter is down here. Again, confirmed at the bottom in the PTOS model. I should call this the kill zone, actually. It's like a football field. Your buy flag is here, and your trend turns here at exactly 228. And then I'm going to turn these off so we can see. And then you ride it up. You got your sell signal confirmed here. Trend turns here. You sell at 266. And that's where we are now. That's on the 6 hour. If we start going to the 2 hour, watch the back test, 64. Not good. I like 80% plus. If you go to the 1 hour, 89%. There, if you want to do more frequent trading, you use this too. So I hope that adds more clarity to how these actual zones work for you all. And I'm wondering, are there any more questions? Oh, last question. Let me see. Oh, by the way, shout out to the team in London. For some reason, a lot of the folks in London love this tool because they're FX traders, and they're pair traders in their DNA. So that's shout out to Team London out there. Let me see. That was T-Class I just did. Last question is from Michael Cannon. Can you provide any type of training or support with a subscription? Training wheel, so to speak. Whoa, well, that's a good question. Let's look at what we have. This is where it's almost like that question was planted. This question was, hold on a second. I've got to get in here. I'm using a different machine than I normally do. So let me share my screen one more time. What we have is this, what we call discourse. And we have a whole area of everything from macro, community, health, finance, crypto, trading, options, you name it, technical analysis, resources. But we have this whole category called indicator support. And we go back here. We have a whole area called PTOS. And here we have hundreds and thousands of topics, everything you need to know, models, tools, resources, and you can see all the people that collaborate on each particular topic. And we don't have a lot of users of this tool because it is more sophisticated, but that's why we're kind of doing this to help people learn more about it. And a big shout out to Gregism and G. De Niro, the real gurus of this. And this is basically, these are your training wheels. If you are serious about investing, this is the probably one of the best things that I've ever created because it was a vision that I had that I was never able to implement. So these are your training wheels, Michael Cannon. Any topic you want, you'll find it. And this is your other big training wheel here. all the pairs that work with all the tests, all the heavy lifting, how to play them, and success rates. So I hope you will like that show. Let me know if this type of format is interesting. I know I've been going for a long time, 45 minutes. But it was actually very good for me to get those types of questions too, and understand exactly where people get tripped up. But remember, this is probably, it's a very advanced type of trading, but we've simplified it to make it almost foolproof. And that's the key, to put the odds in your side, be able to play both sides, go long, go short. Even if you're not comfortable going short, you can just go long and then wait for another buy opportunity. Up, down, like we shared. Let me share that one more time, what one of our members actually does. Oh, well, I've gone on too long. I'm being told to stop it. So thank you all for coming. I hope you like the show. And please let me know if it's too intense, too hardcore, or super easy, or we need some more coverage, more explanation, some of these other areas. But this is, if I had choice of one tool, this would be my tool. Well, you know, pair trading, I always say everything is a pair, but this is a great way to get started out of the gate. And check out the website. There should be a link below for this product. You watch the videos, try it out. Once you have this, you will never, ever be able to go back. And that's just what we've heard so far. So thank you all. See you all tomorrow. Thank you as well to the mods in the chat for helping with these questions. Have a good night, everybody. Bye-bye.